So this video is on NIO. We're going to go right to the daily chart. And NIO reported earnings last week, to be specific on June 6th, in which they reported a year-over-year 7% decrease in revenue. The stock also dropped 7% on the news. Currently, NIO finds itself at $4.46 on the verge of reaching this daily bias level at $4.60. But if you zoom out to the monthly chart, you can see price is roughly 20% below the IPO, which was in 2018. Now, before we continue with the analysis, we are going to look at this article. It is coming from NASDAQ. So NIO was one of the market's hottest EV stocks when it went public in 2018. It produced a wide range of electric sedans and SUVs, and it differentiated itself from its competitors with removable batteries that could be swapped out at its battery station. Now, NIO's deliveries soared 81% in 2019, 113% in 2020, and 109% in 2021. The bulls were dazzled by the growth rates. Stock rallied more than 10 times from the IPO price, all the way up to $60+. Unfortunately, NIO's deliveries decelerated over the following 2 years as it grappled with supply chain constraints, weather-related disruptions, macroeconomic challenges in China, and an intense pricing war across the EV market. NIO's deliveries fell 40% sequentially and 3% year-over-year in the first quarter. That represented a disappointing deceleration from its year-over-year growth in deliveries in the second half of 2023. Its vehicle margins also shrank sequentially. Now, with an enterprise value of $9.7 billion, NIO stock looks cheap at a price-to-sales ratio of 1, but that could continue to trade at a discount until it stabilizes its deliveries and margin for vehicles. EV market also needs to warm up again to the tension between the US and China, which are weighing down many Chinese stocks. And so those were the fundamentals. Technically, this is a daily chart. You can see price is roughly $3 away from the 200-day moving average. Typically, anything above it, you're in a secular bear market. And at the moment, you have the 100-day moving average pointing down and to the right. That's the intermediate line. You have the 50-day, which is the red, also pointing down. So your short-term, medium, and longer-term moving averages are pointing down, which means that there could be some more downside pressure. Now, scrolling up to the weekly chart. This is the huge line in the sand for me. This is where the bulls defended its last stance before price eventually broke through, ultimately bottoming at the $4 level. Now, to put that into perspective before we wind down to smaller time frame, this is the last bottom in which we saw this W pattern form before prices eventually skyrocketed to $60+. And what I'm hoping for is another type of bearish / bullish pattern in the form of a double bottom or a W. All right, so let's go down to the 4-hour chart. And we had a short-term double bottom followed by a rally-based rally, which was created a daily bias level, and potentially price was forming a bull flag, but we did not get the follow through. And again, on earnings, price just fell. So where we're heading next, this level is probably going to be breached, and we're going to retest the recent lows down in that $4 area. I anticipate price moving down over the next week or two, and it's going to trade in tandem with Tesla ultimately. We could potentially see a retest of this trend line before potentially bouncing back higher. But in the meantime, look for more weakness in NIO. Thanks for watching. Subscribe. Please like the video.